Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, December 8th, 2016. In this video, I wanted to take a look at AMD, Advanced Micro Devices. Let's revisit that one. It was a official trade recently, and actually we've traded this one both long and short several times. I'm going to go over the history of this trade, but I wanted to state that the reason I'm doing this video, there's a few reasons here actually. First, let me say normally I don't do a video on any one single trade idea. Why I often do video coverage of a sector and may go over many of the different individual trade setups that I like quickly, with price targets and all that. I never spend, typically I should say, I don't spend more than just, 30 seconds or so, a minute or so on any one chart, and I'll move on to the next one. I'm going to talk about AMD in detail because there's a lot in this chart that I think is a great educational takeaway. It also explains my trading style. Everybody has different trading styles. One thing that they often do, not all my trades, but it's not rare to see me catch tops and bottoms. I'll position long or short at major tops and bottoms, which brings another point. I'm equally as comfortable and I believe proficient trading both long and short regardless of the primary trend in the market. And that's what a lot of people I think have trouble with is taking a trade if the whatever the broad market's doing. I could care less. AMD is a good example of that. Just you look at this chart and we'll go over that. It marches to its own drumbeat. And even when the AMD is in a primary uptrend or downtrend, and as I'll illustrate here in a second, you can have some very lucrative counter trend trades. Excuse me, that was a tongue twister for me. So we'll talk on the trades. And again, what prompted me to do this video was actually a lot had to do with a comment in the trading room yesterday on the CCE trade. If you guys remember, well, those of you that saw it, I posted CCE as an official growth and income trade. CCE is certainly in a downtrend, and a member had stated in the trading room CCE is a falling knife. Absolutely, I agreed 100%, and that's what I do. And my point is, I often catch falling knives, and what happens is, when you catch a falling knife, sooner or later you're going to get cut. The important thing is that it can stand a few nicks, scrapes. That's no big deal. It's the major gashes that will wipe you out in trading. In other words, try to catch that knife and you cut an artery, you can bleed to death. What I mean by that, I'm using a metaphor, obviously, stops, not using stops. If you're catching these falling knives, you can be wrong quite a bit. You can actually be wrong more often than you're right. And because you're trying to hit these major inflection points, which is what I do, when you're right, it pays off in spades, and therefore the gains are a lot larger than the losses. So on CCE, you can see here, this one's fallen down, I don't know what it was, so I think 45% or so in the last, I don't think it was, maybe, let's see, it's about 8 months or so. The stock has been almost cut in half. So certainly a falling knife, but the case was made. I won't spend too much time with it here. You had this beautiful dragonfly doji right on the long-term support I just showed you, or just above it. And I quantified the risk return on this one is even from using a more liberal stop here down above 30 on the weekly support, it still gives you better than a 3-to-1 risk-reward ratio towards our current final target, and much better if you do that fourth target. And I also listed a more aggressive stop that anybody can use no matter where you're targeting. You may target beyond that T4 level, but if you use that stop, I think it's just about the first one about 3%. Yeah, it is about exactly 3% from our entry price, and the first target, or I should say, the current final target is about 19% above there. So that's an excellent RR right there on that one. And if it goes all the way up to that potential for target, then you're talking an RR of almost 10-to-1. So again, my point being, yes, is it trying to catch a falling knife? Absolutely. Did I make what I believe to be a very compelling case that CCE is at or close to a bottom and at least offers an objective entry? Absolutely. Whether it works out or not, that's the thing in trading. Technical analysis is not 100% accurate. There is nothing 100% guaranteed or accurate in trading. But again, you can make your case. If you could make a compelling reason to go long or short, And then, most importantly, quantify or minimize, I should say, limit your downside risk if wrong, and make sure that the upside potential is going to be several times that. In other words, don't risk a dollar to make a dollar. That's a sure recipe for disaster in trading. All right, let's get to the charts of AMD. And again, just to clarify, sometimes, but not always, my trading style incorporates positioning long or short at major tops and bottoms. I'm equally comfortable and proficient at trading long or short regardless of the primary trend. I'll go over that whether it's in the market or in a stock. I'll go over my past trades here on AMD. Let's do that now. AMD, we've had 4 official trades on AMD. 3 have been longs, 1 have been short, and that goes back all the way to 2012. One thing that I do, what I believe I do different from any other service out there, is every single post that has ever been made on the site, without exception, is archived indefinitely for everyone to see, whether you're a member or not. If it's a trade idea that is protected content, only members can view. As long as the trade idea is active, then it goes to the completed trades for 2 reasons. Number 1, educational. If you come into the site and let's say you want to trade AMD and you want to see how is it traded in the past, everything is there. If you go on the front page, the home page of the site, there's a drop-down box that says select tag. Just click that box. When the menu pops up, type in AMD on your keyboard and AMD will come up. Every single post ever made on AMD. And I'm going to go over the results here. The other reason that I put those trades there, win or lose, they all go in the completed trade category, is for accountability. If you want to come in and see what my track record is on an individual stock, market calls, etc., it is all there. And again, for the life of me, I don't know why. I've seen some other services out there and you can't access. They'll show you their highlighted trades and all that, but you can't access everything. Why not? I can tell you, I run a website. It's super simple. Any website can give full access to past content. It's easy to do, but okay, again, so for the life of me, I don't know why most of those don't do that. So here's AMD again. You can visit and reference that. Just pull that tag and scroll down, and you can verify all these trades I'm going to talk about here. So we had 4 trades, 3 long, 1 short. The last one, you guys might know if you're watching this video, we had one closed out in October of this year for a 10.6% loss. The previous trade before that, we closed out on December of 2015, right before year end, for a 55% gain. The trade before that was a long also, closed out on January of 2013 for a 52.6% gain. And then the first trade that we did on AMD on the site was in 2000. We closed it out in October 2012 for a 7.2% loss. So there it is. So we had, and again, both of the 50+% gainers were long trades, and more importantly, there were counter-trend trades. AMD was clearly in free fall, and I'm going to go over that. In fact, let's look at the charts here. One of those, you can see it here on this chart. This was this daily chart we're on right now. 2015's right here. You can see the January 2016 begins. So here we were. We went long right off the bottom, not far off the bottom. On August 10th, we went long at 184, and we rode that up. And as so often is the case, and this is why I list final targets, it is not unusual at all to see, and I can go back dozens and dozens, if not 100 or more trades that reversed within sometimes pennies of the final target. So you can see what we did here is we got long near the bottom. We didn't nail the exact low on this one, but not far from it. We rode that one up, and these targets are placed well in advance, and never in hindsight. Always the targets placed in advance. So we rode up while AMD, point being, was in free fall. Let's look at this on a weekly chart, and that was a 55% gain from there. Now if we look at a weekly chart, I have another board here. The short trades, as I mentioned, we had a short trade that was stopped out recently here for 10.6% loss, and then one back in October 12. It was so quick, it was only, I think, on it for a few days, 7.2% loss. The 2 long trades, again, to impress my point that I catch falling knives, these were the entry points right here. And again, these are referenced on the site. November 28th, 2012, we went long at 184 right here. We rode that thing up, and look at that, nailed the highs on it. You can see We exited on January 25th at 290, and the stock from there pulled back. It's hard because those lines are there. I can't grab that exact level. I can do it from the left of the chart. That stock dropped about 23%. So we were able to milk the initial counter trend bounce. And you talk about falling knife. So this is the point. This is the point on CCE. This is a point on a lot of other trades you're going to see on the site. I'm going to catch tops, or I'm going to try, and I'm going to catch bottoms. But when you catch them and milk the bulk of that move, especially if your losses are quantified, which they were all down here. If we would have been stopped out, it would have been negligible. And sometimes we are stopped out and the trade goes on to play out. But that's it. It's all about loss mitigation. And more importantly, do the math. So we had 4 trades on the site. The losers averaged about 8% loss or so, and the winners average about 53%. So you like I said, you only have to get a few right when you're catching tops and bottoms. So again, fast forward August 10th, 2015, we were long again at 184. Sold the highs within mere basis points or a couple of percentage points from the highs. Exited on hit that final target that I had that I just showed you on the daily chart in late December at 285, and look what happened from there. The stock went up just a little bit more and plunged right after that 42%. So not only were we able to get in at the lows, in both cases, we were able to get out the highs. And I'm honest to God, this is not just one phenomenal trade that I had. You go back and I can show you for years many trades like this. And again, they all don't work out. It's a numbers game. There's quite a few. And lately, we've been in a sideways grinding market. I've seen more trades stopped out in the last 6 months than I have in the last 6 years, probably. I mean, that might be an understatement, but it's amazing. This is sideways with AMD. And this is when you see I don't touch the stock. You get in these choppy ranges. Now, again, I might have jumped in on a 60-minute chart, but certainly would have been nice to catch this whole trend, but I didn't. And it's more of a fact that the stock just wasn't on my radar at that time. If I noticed something there, I might have went long there, and sometimes I'll just let a trade run and raise stops and let it go. But point being, bottoms and tops, and let's not beat a dead horse, but move on to a long-term chart and take a look at AMD. Okay, this is a monthly chart. Now this chart goes back, and this is where I wanted to really impress the point that the things that I'm noticing here on AMD can be applied to any stock. I'm talking about, in this case, well, I showed you catching bottoms, and right now I'm looking to catch a top on AMD. I think a case can be made for a significant top. And I'm talking not your run-of-the-mill 3-5% swing trades. I'm talking a trade that can easily produce 50% or more, if and when this one plays out. All right, now keep in mind, we're looking at about 38 years of price history. This goes back to the mid to 80s here, 1984. So at least 36 years or so plus. And what you can see, what stands out to me, I'm a very visual person. I'm pattern recognition. That's always been, before I was into charting, anything, and certain things just stand out. And when I look at this chart, what I see right away, and I drew it here, are these trend lines. AMD is just a very predictable stock. Now keep in mind, a monthly chart, every candlestick is a month. These are long-term trends. It might look like a busy 5-minute chart here, but it's not. These trends last for up to a year or more in some cases. But look how well defined these uptrend lines are. And I didn't draw each and every little one, but you can see as I highlight here, you see the trend lines. So what do you see here? You see a pattern of a stock, and yes, I'm only making the bearish case now. I could flip it around and draw downtrend lines. This chart would look too busy, but because we're at a point where I think AMD is at close to a major top, one of these tops before, and what I've done here is, well, let's take a look. Again, 30-something years, 36, 37-year chart right here, and as you can see, I love to use the RSI on any time frame. RSI is a measure of how overbought or oversold the stock is, and any reading above 70, this red line, is considered overbought. Now, in the last 35, 36 plus years, as you can see, we've only had this stock reach overbought levels a handful of times. Now this one actually right here, that wasn't an overbought reading, but this was divergence. I'm going to talk about this. This is an important point too, that sometimes you have overbought. I need to mock this chart up. I missed one right here. Okay, what I did is I added this one right here. I missed that overbought reading somehow the first time around. So this one actually didn't, it fell just shy, but this was an extension. I often talk about that. I think this is a good takeaway. You can see how the RSI only fell to about the midpoint. For some reason, I don't show the 50 line here. I usually have the 50 level. I'll just add it right here. You can see, look at the horizontal line. That's the midpoint. So when you have overbought, in most cases, at least with AMD here, you had a single overbought reading that crossed above the 70 level and then fell back below. This was an extension, an extended overbought reading, because we only fell back to about the midpoint on the RSI. Prices came back up, so we had a divergent high. You can see here we became overbought, but within relative close proximity, prices became overbought once more at a lower level. So this is negative divergence. See prices making the higher high. It forms this wedge type pattern right here. And this was your sell signal. Actually, that first one was a sell signal. And you know what? I didn't calculate it, but I'll tell you right now. So let's just play that game then. Let's just say from the first overbought reading, it certainly played out. There's a 48% correction. Okay, so I should add 48% drop here. So without fail, here's my point, guys. Without fail, 30-something years, every time that stock has been overbought, we had, and I'll have to add it here, I just measured it for you, a 48% drop. Now, you can put an asterisk by that next one that I had in line, that 67% drop, because that was actually off a divergent high. Now, I don't minimize that, and I certainly should have that there. But again, the asterisk being that this reading right here was a little shy, but it was an extension. It had negative divergence, a divergent high, and then it led to a 67% drop. Next overbought reading, right there. I'll put the little vertical line up on the crosshair so you can see it. So from this peak down to here, 74% drop, 94% drop, 96% drop. See that overbought reading? That, by the way, yeah, that one, no, we didn't hit that yellow line. I'll get to that in a minute. So 96% drop. And that was back in 2006. AMD has not seen those levels. In fact, I put a yellow line here. This line I added, just where we're at right now at about the 82 level. We've only seen AMD overbought on the monthly time frame one time in history. And that was at the dot-com bubble. And that followed a 94% drop. Now here's the fun thing, guys. And again, I told you this I'm doing this video because I can just, this stock and everything that happened is chock full of useful tidbits that I've learned over the years in trading. Let's just pick the smallest one here, 48% drop. The stock at that point, the first time it became overbought, dropped by, we'll call it 50%. This is how math works, and most people don't get this, and this is why loss mitigation is imperative in trading. It is the single most important rule, is control your losses. And that is, if you lose 50% on a stock, let your losses run, you might think, well, okay, make 50%, I get back to break even. Wrong. You have to then make 100% on your money. In other words, if you buy a stock at 100, it goes down to $50 a share. That's a 50% loss. Now the stock has to go from 50 to 100. And it gets even worse. If you go down here, here's a 74% drop. Watch, I'm going to measure it here. With my measuring tool, you can see the percentage gain. The lower left of that pop-up box, 73.69%. Okay, so, well, what do I have to do to get back to even? Well, let's grab that and go back to that point. And what it's doing, it's measuring reverse, 252%. So my point being that if you don't control the losses, on many stocks, you let them ride, you'll get to a point where you're never going to get your money back. Or it could be very, very hard, many years, many decades. And you can see anybody that bought AMD back in the dot-com bubble, you are still down 78%. Or another way to look at it, you're down 78%. Again, if you've been around that long holding AMD, you still have to go up another 360% from here just to get back to where you were. All right, so point impressed. And again, the takeaway from this, besides the overbought readings, and there we are again at the most overbought conditions in AMD since the dot-com bubble, back in 2000, which popped in early March of 2000. So if that's not a compelling reason now, this is not an exact timing indicator. Far from it. We were overbought back here months ago. We were overbought. We hit that level about 100% ago. So if that doesn't impress another point, that overbought in itself is not a sell signal. It is, however, a condition to be on the lookout for a major trend reversal. Now, we also have overbought at resistance. I should raise that line. See this previous reaction high from 2009, looks like? Let's see. Yeah, that was 2010 right here. We're right at that level. We haven't closed above it yet. We're on a monthly basis. We're peaking above it right now intra-month, ever so slightly. But all that matters here is a monthly close. That's where you get these bodies, the thick part. Everything else, this is called a wick or a shadow that goes above, means intra-month we popped above and then we fell back down below. So right now, essentially, we have AMD at the most overbought conditions it's been at in 16 years and at resistance. So that in itself is a very, very bright red flag to me if you're long, saying, okay, either tighten your stops. It's certainly momentum in the stock right now. It's up almost 10% today. But I think the downside, as the case can be made here, should be no reason that this stock isn't poised to drop anywhere from 50 to, just look at the history of it. Let's just say at least a 50% drop and leave it at that for right now. All right, weekly chart. And again, the uptrend line breaks are what stands out to me, how clear, and you can see this uptrend. So all we need to do is see this uptrend crack, and there's your sell signal. And what I look at, not only are the uptrend lines, look how violent and swift the moves are once these very steep and fairly predictable uptrends go. It goes up, the stock goes down very sharply. So this is a very tradable stock, I like to say. There's no in between. Once those trend lines break, you don't see the stock moving sideways. You did see a little kickback here. It never made those highs again, then fell sharply. But for the most part, it's waterfall sell-offs. So just a stock with a series of rips and dips. All right, a weekly chart. What do we see here? I already covered this one. That's just the trading history, catching the tops and bottoms. This one tells a little bit more. You had a divergent high back here, so I circled. This is a negative divergence on the RSI and the PPO, which I like to use on the weekly time frame. Divergent high and overbought readings. We just talked overbought readings on the monthly time frame. Now we're looking at overbought readings on the weekly time frame. On the weekly, you see it's a little more common to have a divergent high. In other words, a very high overbought reading with a lower overbought reading. You can see it, stock making a divergent high. That's exactly what happened here, and that was good for, I'm shooting a little high, so this will underestimate the return. I'll stop a little low. That was about an 84% drop. And this divergent high is very similar to this one. Between there, we had this single overbought reading. You can see the waterfall sell-off, and that was good for a drop. Again, if I measure from right here and grab it on TC2000, it's going to move that trend line. So that was good for about an 80% drop. You can see a sideways trend here, slightly higher, while it made negative divergence, overbought, and then a lower overbought reading. But on the bigger picture down below, you had these weekly bullish divergences forming. And again, I was long down here at the bottom of this, and that's why. And that made the case for a catch a knife falling trade. We had bullish divergence on the weekly chart, and my entry was timed based down on, I forget that one, whether it was I zeroed in on the 60-minute chart. I might have. I know at least one of those trades was on the 60-minute chart to really time the entry. But I also confirm it on the daily chart. So we've come full circle. We had a bullish divergent low. There was a downtrend line taken out. You can see this downtrend line better if we go back 6 days. Look at that downtrend line. Beautiful. So that was a breakout and a nice move, and rightfully so. It's already exceeded the measured move, which is the distance of the wedge here, or at least met that measured move. And we have that divergent high. We're at resistance, as I talked about. There's the 2010 highs, 2010 double top highs right there. Negative divergence, everything you want to see. So I'm making what I believe to be a very solid case for a meaningful reversal. The trend is still up right now. We need a little evidence, but I'll probably be adding this one back as another short trade soon. Daily chart, and again, I'm working my way down, monthly, weekly, daily, and we'll get down to the 60-minute and wrap this up here in a second. Negative divergence. It's still what I like to call unconfirmed divergence. Why do I call this unconfirmed? Because the PPO, which I'm using here, PPO is going to do a little better job with this huge price move. I can tell you it'll do a much better job than the MACD. If you're trading Procter & Gamble or Coca-Cola or something, and there's not a big price swing, I probably should have used a different stock than Coke. I just mentioned that one falling in free fall, but that was the European subsidiary. Either way, use a PPO instead of a MACD when you have large price swings like this. Here's a stock just on this, and when I'm talking about price swings, I'm talking on the chart that you're looking at. So from the highs to lows, or low to high on this chart, it's 540% gain. PPO will do a better job than the MACD. All right, so there it is, negative divergence, but it's unconfirmed. Why? Because we're looking like we're about to have a bearish crossover, but then it popped back up. So what I need to see is before AMD, before the PPO takes out this previous reaction high from back in late July, you can move this line up here. If that line's horizontal, that's showing you the peak. So we need to have the PPO turn down before or by the time it gets here. If it goes any higher, that divergence has then been negated or burned through. We no longer have negative divergence. But as long as prices are making a higher high, as they clearly are now, and the indicators are making an equal or lower high, that is negative divergence. So we have negative divergence on the daily time frame. And now let's just take it on home down to the 60-minute time frame. We have, as with the daily, unconfirmed, and I probably could put a PPO up here as well and it would show a little better. Let's see if I have one quickly. I got to move some other boxes that you can't see to the left. Here's a PPO down here. Yeah, you can see it a little bit better, how the divergence is a little more pronounced than this MACD up here. It's almost back to the equal previous high. PPO is still a little lower. That's because there's a pretty big price move. The AMD is doubled almost on this time frame, from about the mid 5s up to the mid 10s. So there's the PPO showing that divergence, but it's also still in place on the MACD. It's in place on my 1333 histogram and on the RSI. RSI is turning down, but again, we have to see the PPO and or the MACD curl back down, make a bearish crossover, and confirm that bullish divergence. And if so, then this one has a lot of hot air to let out of it. And I can just show you on the 60-minute charts. These are targets here, target there. They're all support levels. And so as far as timing goes, the case was made all the way out from the monthly chart, but that is, again, just because we're overbought there, is far from a timing indicator. But when we go down to the daily and even the 60-minute charts, the safest play would be a break of this uptrend line right here, this potential rising wedge. This one may have a little more work to do, you can see. But I think it'll work out something like this. I think soon we'll pull back here, have maybe one last reaction there, and then boom, breakdown and reactions along the way. And then at that point, this just times our entry. Then we use the daily chart and even the weekly chart for our targets. These were the targets from the previous trade. I think based now on how overbought we are on the weekly chart, at minimum, I see this one over time. You got to give this one time. The counter trend rips are going to be powerful. If you're not used to a stock that can go up and down 10% in a day, don't trade this one. Or if you do what I do. Beta adjust your position size down. If you've normally take $10,000 in each position you take on, let's say, the SPY, don't put 10 grand in this one. You could lose, today you'd be down, if you were short the stock, you'd be down $900, over $900. You'd probably be stopped out. So what you do is you take 3,000, 4,000, whatever is in your comfort level, just to account for the volatility there. So that's another lesson, something I harp on all the time is pay attention to not just the current volatility. When you look at a chart, I'll give you another example of that. Here, AMD was trading in a range. So you might say the ATR, average true range, would have been relatively low at this point. But I look at this chart and I say, what's the history of this stock? Okay, it's consolidating, but when it breaks out of these ranges, here's a stock that can have some big moves. And you look at these candles, and today's candle, this 9% candle, it's far from out of the norm. In fact, there's quite a few candles larger when I go back on this weekly chart. And this is again showing weekly moves. So that's something again to look at. And I started doing that a few months ago, is posting suggested beta adjustments for position sizes. And again, I take into account not just the ATR, some of the metrics that you can use and get out there, because that can often give you a false sense of the volatility of a stock. I look at chart patterns. If you trade a rising wedge or a falling wedge pattern, those are like coiled springs. When as a stock approaches the apex of a wedge, the price oscillation or variations, swings back and forth, get smaller and smaller because prices are compressing. That's hence what forms a wedge. And so you're going to have very low volatility. However, wedges are like coiled springs. When they break, you usually see prices explode to the upside or downside. And volatility, or at least the price swings, the daily price swings, increase quite a bit. So again, that's all factored into the my analysis and recommendation on the suggested beta adjustment. All right, I think I hit on all my points here. Let me just check my list real quick. Yep, yeah, I think I did. Okay, and just remember, one final thing I'll leave is everything I just talked on works just as well in reverse. I'm making a bearish case at this point in time for AMD, but as I showed you historically, I've made not just talk the bullish talk, but actually traded it out. So these oversold or overbought readings I just talked about here on the RSI, it works in reverse, guys. You look down here, oversold, just follow it up, and you can see just as well. So if you're a long side trader, and again, if we were looking fast forward a year or two from now, whatever it takes, and this RSI is down, crossing down at or below that 30 level, and the charts confirm, I'll be looking at AMD as a long to try to catch one of these rips, down here. That was a 500% rip, and might not milk it always from top to bottom, but once in a while you can catch those, and like I said, you only need a few of those a year to really do good on your account. All right, this has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.